Stocks on Wall Street rally on hopes that U.S. China trade tensions could ease soon. Dow jumps 1,000 points to snap 4-day losing streak. Trump comments on a no intention of firing Fed chair and also sends futures higher. Stocks in Asia mirror Wall Street moves, opening higher on hopes of de-escalation in U.S. China tensions. The gift Nifty is also indicating a gap-up start for the Indian market. Oil prices rise, extending previous session gains as investors wait fresh round of sanctions on Iran, and drop in U.S. crude stocks also support prices. Gold prices pull back from record high levels as Trump softens stance on China. HCL Tech marginally misses estimates, capping off a disappointing Q4 for the Big Four in Indian IT. Clients turn cautious and adopt a wait-and-watch approach, but deal wins remain strong for the sector. Also, watch out for numbers from LTI Mindtree and Tata Consumers due later today. At least 26 civilians were killed in a terror attack in Pulwama and Jammu and Kashmir last evening. This is the deadliest attack in the valley since 2019 Pulwama strike. The resistance front has claimed responsibility for the attack. PM Modi cut short Saudi trip, and FM Nirmala Sitharaman also cut short her US trip. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. A look at what the Asian markets are doing. That's what we should start with today. A good Wednesday shaping up across the globe. Taiwan index holding on to gains of 3%. Hang Seng holding on to gains of 1.6% as well. And overall, Asian markets have opened up on the positive note. Japanese index, whether you look at the Nikkei, whether you're looking at the ASX 200, all are managing to hold on to gains of more than 1% in today's trading session. Shanghai, that has just opened up right now, muted trading session is what it's opened up with. But other than that, everything is opened on a positive note given the cues from the US market. And look at the Nifty implied open. That's indicating a positive start for the Indian market as well. A gap up start is what we could say. 200 points uptick is the indication coming in for the Nifty implied open. So yes, a positive start is what we're watching out for today from the Indian markets as well. But a look at the US market, like I was mentioning as well, right? Stocks finished sharply higher on a rising optimism that we saw in terms of the trade tensions between the US and the China that could soon ease. The Dow surged more than 1,000 points to end the 4-day losing streak. Both S&P 500 as well as the Nasdaq Composite jumped more than 2%. We have CNBC's Angelica Peebles who's joining in with us to give us a wrap on what happened on Wall Street. Angelica.
U.S. markets were up across the major indexes in Tuesday trading on investor hopes that a trade deal with China could happen soon. The Dow rallying 1,017 points, the S&P 500 up 130 points, and the tech-heavy Nasdaq rose 430 points. The major averages spiked Tuesday after a report that Treasury Secretary Scott Bessent told a group of investors Tuesday that a trade war with China is unsustainable and that a deal between the two countries is possible. A person who was in the room tells CNBC that Bessent said he expects there will be a de-escalation with China in the very near future. Prior to Bessent's comments, the International Monetary Fund issued a report predicting the global economy is headed for a slowdown as tariffs now exceed the highs reached during the Great Depression. The IMF also lowered its global growth forecast for next year from 3.3% to 2.8%. and warned that additional tariffs could slow growth even more, and the U.S. dollar's role as the world's currency reserve could diminish. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. But continuing with the U.S., the Treasury Secretary Scott Bessent says that he expects there will be de-escalation in President Donald Trump's trade war with China in the very near future. CNBC's Iman Javers is getting us a detail on what Scott Bessent had said, his comments coming in there.
What the Treasury Secretary said was no one thinks the current status quo is sustainable at 145 and 125% in terms of the relationship with tariffs with China. He says, so I would posit that over the very near future, there will be de-escalation. And I think that that should give the world, the markets, a sigh of relief. He also goes on to say, I do say China is going to be a slog in terms of the negotiations because that engagement started, I would not yet. But I think, again, I think neither side thinks the status quo is sustainable, but I've said quite a bit. So what Besson is saying here is that neither the United States nor the Chinese side thinks that the trade relationship is sustainable between the two countries. And he also says here that he views this ultimately as an embargo between the two countries, that it's ultimately going to have to lead to some kind of negotiation. And he talks about the idea of rebalancing the two nations' trade relationship together. He says they have stifled the consumer economy and favored manufacturing. We want to increase manufacturing. The identity of that would be less consumption. And if somehow I could see a Ray Dalio essay on this, like a big, beautiful rebalancing. If we walk out the door of negotiations and sign something in 2 or 3 years that looked like that, I would think that it's a huge win. And then the trade practices, the goal of that is not that hard a break. We want to stay engaged, but it's going to be more fair. So that's a summary, again, from a person who was in the room of exactly what the Treasury Secretary told that audience at the JP Morgan event yesterday.
Thanks so much for that. Now, following Scott Besson's comments, we did have the U.S. President Donald Trump. And what he said was he won't play hardball with China on trade, and that U.S. tariffs on China will be nowhere near the 145% his administration had previously discussed. Listen in.
145% is very high, and it won't be that high. It's not going to be that high. It got up to that. We were talking about fentanyl, where, you know, various elements built it up to 145. No, it won't be anywhere near that high.
And what level do you think it'll come down to if you haven't?
It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to have. It's not going to happen. We're going to be very good to China, have a great relationship with President Xi, but they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made, so that won't happen. But they're going to do very well, and I think they're going to be happy, and I think we're going to live together very happily and ideally work together.
Meanwhile, Wall Street futures jumped after Trump spoke of the Fed chief. When he was asked if he planned to fire Jerome Powell, this is what Trump had to say.
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Okay, let's also listen in to what the former RBI Governor Raghuram Rajan has to say on Fed's independence and the impact on the market.
Don't think both what the Fed chairman said and what Mr. Trump said today suggests that the Fed is in any danger of having to cave to presidential power. So that seems like good news both for financial markets and for the United States. I think on the issue of what will the Fed do, I think Chair Powell made it very clear that it was really focused on its dual mandate, which is growth and inflation. Yes, if growth tanks, it will come to the rescue. That's part of its mandate. And yes, if inflation really goes up, it will keep rates, at the appropriate level. The key question is what happens if both happen at the same time? Growth tanks, and at the same time, inflation is persistent. And there the chair said, look, it really depends on which is more important, where we are further away from the target at that point, and we will focus on that. Here's an independent authority doing what they need to do on monetary policy. And if the economy slows down considerably, well, there's a finger he can point to at the Fed and say, well, they're partly responsible. I think if he, in a sense, takes responsibility for the Fed, which I think is going to be very, very hard, even if he does manage to find a way to fire Chairman Powell, which I think, again, is off the cards. But if that did happen, I think it would be a problem for the presidency because you own the entire economy at that point. There's no one to blame.
Okay, on that note, let's also listen in to Goldman Sachs CEO David Solomon on the fallout from President Trump's trade policy and the impact of the policy uncertainty on the markets.
We're in a very different macro environment than we were in just a few months ago. There was a lot of optimism around a lower regulatory environment and changes, and so now we're a few months into the administration, and instead of policy becoming more certain, we actually have a greater sense of uncertainty broadly, and it's having a big impact on asset prices and markets. And so the trade policy and the discussions about trade policy certainly have changed the level of uncertainty in markets. Markets are looking to reprice the value of things based on the uncertainty they have around what these policies will ultimately look like and how they will ultimately be implemented.
Now, in an exclusive interview with CNBC TV 18, ECB's President Christine Lagarde says that the initial shocks faced by Europe following the tariff imposition, what was that? Listen in.
Number one, the tariff. Number two, important as well, is the whole defense momentum that is taking up in Europe and which has led, in particular, Germany to increase significantly its commitment. And number three, and this is really a result of the tariff announcements and subsequent developments, structural reforms, which Europe had been talking about, which had been described in various reports, which Europe is now saying, okay, now it's time and it's Europe's hour to actually do the things that have to be done. So it obviously has an impact, some of it positive, some of it negative. I think on the growth front,
Sure.
We've always said that it would be a lose-lose, and we're seeing it.
Okay, now that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for in today's trading session as well. First up, let me go across to Vivek, who's here to set us up for the trade. What are the important cues that we're keeping an eye out on this morning? Good morning, Vivek.
Good morning, Winnie. Well, absolutely right. Absolutely nothing to complain about as far as the setup is concerned today, given the fact that we saw very, very strong handover from the U.S. markets, erasing and going ahead and recovering most of the losses it saw from the day before, mainly on the back of the fact there's been a significant softening of stance as far as Trump is concerned towards the U.S. Fed chair. Now, on the back of that, all of the U.S. markets ended higher by over 2.5%. Along with that, you also saw oil prices gain yesterday. So Brent gained close to 1.8% at $67.44 a barrel. It's where it's currently hovering at. Indian markets, well, yesterday was another day of very strong gains. 6 straight sessions of gains we saw, but cooling off a little bit intraday as well. Banks and NBFCs were the key sectors that continued to rally as RBI went ahead and relaxed the norms as far as LCR guidelines were concerned. It was earlier a lot stricter than what the eventual final outcome has come about. Along with that, FMCG as well as consumer discretionary stocks rallied from the day's low. And remember, recent lows, they've recovered quite significantly in yesterday's trading session. Advanced decline ratio very strong, 2:1. Broader end of the markets continued to see strength. What is it that will keep markets very active in the session today? Whole host of results reactions. Remember, a lot of companies came out with the results post-market hours yesterday. HCL, Havells, Worry, along with that, Cyient as well as AU Bank will remain in focus. And today, some important results up for that will be declared today. Key amongst them being LTI Mindtree as well as Tata Consumer. GIFT Nifty as well as Asian markets all indicating a strong gap-up start for our markets today.
Absolutely a strong gap start for our markets today, 200 points up as of now as well. So keep an eye out on the Indian markets. But which are the important stocks that you should be keeping on your radar this morning? We have Ria joining in with us. Good morning, Ria.
Well, yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, HCL Tech has reported its Q4 numbers. Constant currency revenue has declined by 0.8% in Q4, but for FY25, we've seen the revenue growth coming in at 4.7% versus the company's guidance of negative 1.3% to 0.6% growth. The EBIT margins this time around have come in at 18% versus 19.5% in Q3. For AU Small Finance Bank, net profit has seen a decline of 4.7% sequentially, but net interest income has gone up by by around 3.5% on a sequential basis. For M&M Finance, the net profit has gone down by around 9% over the previous year, but the net interest income has seen an increase of 12.1%, and the AUM has also gone up by around 17.35% over the previous year. Tata Communications, in Q4, the revenue has seen an increase of over 6% over the previous year. Net profit has seen a sharp increase coming in at 1,040.5 crores versus 321 crores that we saw in Q4 of last year. But this profit in Q4 of 25 includes a one-time gain of 577.8 crores. For Cyient DLM, net profit and EBITDA have both seen very sharp increases of 36.5% and 51.2% respectively on a year-on-year basis. For Waaree Energies as well, net profit has seen an increase of around 36.4%, and the margins this time around have also seen a very sharp increase, coming in at 23% versus 14.3% in Q4 of last year. Now moving on to PFC, they have come out with a statement on Gensol Engineering saying that the rupees 307 crores out of rupees 352 crores disbursed to Gensol Engineering for EV leasing in 2023 still remains unpaid, and PFC has now filed a complaint with the Economic Offences Wing of Police regarding falsification of documents. Also keep your eye out on Ambuja Cements since they have completed an acquisition of 46.66% stake in Orient Cement. Varun Beverages will also be in focus since they have started commercial production of carbonated soft drinks, juice-based drinks and packaged drinking water at their Prayagraj plant. Lastly, two companies will be in focus on the back of order wins. For Ashoka Buildcon, they've received a letter of acceptance for a project worth rupees 568.86 crores from Central Railway, and PNC Infratech has been declared as the L1 bidder for a 239.9 crore project in Rajasthan.
Thank you so much for that, Priya. And finally, Sudarshan is here waiting by to tell us what is going to be happening in the world of FNOs. Sudarshan, we are seeing the start coming in as a gap-up start, but any important FNO cues that we should keep an eye out on?
Good morning, Vinny. So for today, cues can be divided in two parts. So as far as global cues are concerned, those cues are strong after a strong close to yesterday's session. Today also, after Trump's comment of that he has no intention to firing US Fed Chairman Jerome Powell, we are seeing a big gains coming in US futures as well. All the major indices in futures are higher 1 to 2%. Now, as far as domestic cues are concerned, those cues are indicating that we have moved to a congestion zone. So we'll have to see where exactly we move from here. But talking about yesterday's session, we gained for 6 straight days. We came off day's high, but we managed to close in the green. And for today, GIFT Nifty is indicating a start. It's a gap up start. Nifty is going to see open with a gain of more than 200 points as far as indication that we are getting from GIFT Nifty. Talking about the flows, FIs continue to buy. Yesterday also we saw FIs buying nearly rupees 1,300 crore. As far as DI is concerned, they have sold nearly 900 crore. In the index futures too, FIs have sold more than 200 crore. They have added long positions, but more than addition of long position, they have added short positions. And here the addition was almost 1,800 contracts. And FIs long exposure remains around 32%. On the option front, on the call side, 24,400 and 24,200 call were the most active ones, and on the put side, 24,200 put has seen addition of more than 26 lakh shares, and 24,000 put also has seen addition of nearly 21 lakh shares. So now important levels for Nifty. Support is at 24,125 and resistance is at 24,400. 2 stocks are in FNO band. New entrant is RBL Bank, and 4 stocks have come out of band, and those stocks are Tata Elxsi, Angel One, Ireda, and Hindustan Copper.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on those stocks as well, which are in the world of FNO. But on that note, we're going to slip into a very short break. Up next, we'll get to the updates that are coming in from Pahalgam, the tragic incident that took place. So we'll give you more updates on that front. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. And in a tragic incident, at least 26 civilians, including 2 foreigners, were killed in the terror attack in Pahalgam in Jammu and Kashmir. Pakistan-based Resistance Front has claimed responsibility for the attack in what is the deadliest since 2019 Pulwama attacks. Prime Minister Narendra Modi has cut short his bilateral visit to Saudi Arabia in view of the attacks. The Finance Minister has also cut short her trip in the United States. Parikshit is joining in with us to give us more details on this one. Good morning, Parikshit.
Well, yes. Overnight, there have been a series of developments around the Pahalgam terror attack. This is the worst attack that the Valley has seen in many years now, and that's quite clear. And there is all-round condemnation that has come from world leaders. Over the night, President Trump has spoken to Prime Minister Modi, extending his condolences and expressing sympathy, expressing America's support in this hour of crisis. The Prime Minister, as we know, had immediately cut short his Saudi Arabia trip. He arrived last night. He held a meeting immediately with NSA Ajit Doval. The foreign minister was also present at the meeting. So they're discussing the way forward. He's had a conversation with Amit Shah, the Home Minister. The Home Minister himself is in Srinagar right now, holding a high-level meeting with chiefs of different intelligence agencies, the security forces in Jammu and Kashmir, the police force, NK as well. So they're coming up with a plan of action. But the message coming from India is that those who perpetrated this terror attack, this ghastly attack, will definitely not be spared. So India would, of course, be working with some of its closest allies to map out the information necessary to zero in on the perpetrators and the motivations for this attack as well.
Okay, Parikshit, thank you so much for the latest update coming in on this front. But on that note, we're going to slip into a very short break. And after the break, we'll get you what's happening in the world of commodities. So stay tuned in for that. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's move on and go across to Manisha, who's waiting by to tell us what's happening in the world of commodities this morning. Good morning, Manisha. And gold seems to have come off those highs.
Oh, well, yes, absolutely. Some profit taking finally coming in for the gold prices. We did see a $3,500 an ounce of a high yesterday. But interestingly, it did not close at those levels and closed at $3,380, so much lower. In the Asian markets right now, there's a bit of a buying that has come into the market. So yet again, we've seen that intraday correction come in for gold, but not a large one. And those dips are getting bought into in the Asian markets right now. Well, a couple of things. One is the Treasury SECI US saying that they expect de-escalation in U.S China trade conflict. And the other is the U.S. President Trump backing away from threats to dismiss Fed's Powell. So this has led to some easing off in case of the prices. But even with that, we are up 31% in 2025 for gold prices and 45% up in year-on-year basis as well. So good going continuing in case of gold prices. What is also doing well is the other industrial commodities. Copper, for example, gained nearly 2% overnight. It's trading at a 2-week highs on weak US dollar index. Copper prices are up 5% on the week. The hefty US tariffs on China are keeping markets slightly cautious, but it's a good buying in metals and precious metals. Even crude prices trading in positive in Asia.
Okay, Manisha, thank you so much for that. We'll be keeping an eye out on crude as well as gold prices going forward as well. But on that note, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.